going to look at the growth and inflation, the investment, the consumption pattern, and the external environment, the ecosystem. So let's look at growth and inflation. Now, if you look at the World Uncertainty Index, now what we call, I always allude to this, the era is called the Barney world. Now, when I say Barney world, I mean the world is becoming more brittle. It's a place which is, anxiety is growing across economies, across continents, across countries. It's becoming more non-linear, the cause and effect, and it's also becoming more imperceptible because you cannot, for everything that is happening, there is no explanation for it. So in terms of, if you look at the whole world today scenario, there have been a lot of uncertainties which has been ruling right from starting from 2009 when we had the recession in the West, when we had the sovereign debt crisis in Europe, Spain, Greece, all these economies were in deep trouble, Italy. Then we had the Brexit situation in the EU. You had the US elections. Again, COVID-19 was a huge uncertainty which the world had to go through. And of course, now we are seeing even more complex situations around the world. So uncertainty is something which is going to be a constant for us. Now let's see how the Indian economy has performed with all these uncertainties around. So if you look at India, and I'm especially focusing on India right at the moment. So if you look at the GDP, it's about 6.5%, and the forecast for the current year is 6.4. But having said that, Q1 has been a very good for us. Q1 results, it's almost like 7.8% if I'm not mistaken.
Yes.
It's above 7.5. Of course, Q2 would be slightly lower because of the complications that we had from the US tariffs. But overall, I think we are, we should be hitting 6.5, 6.7 growth. So if you look at average real GDP growth, now when I talk about real GDP growth, this is the adjusted over inflation. It's not the nominal. Nominal GDP growth is much higher. So the real GDP growth, if you look at, compare the GDPs of India, China, UK, United States, Eurozone, all these are, you can see the clear leaders in terms of one of the largest economies being there with a 6.4% forecast. So that's again, when I said about the nominal and the real GDP, that's how it's explained. So the nominal GDP growth is slightly higher because it's not adjusted for inflation. The real GDP growth is, and if you look at Q4 of last year, was a very good quarter for us. In terms of the GDP growth, we had a 7.4%. Q1 of the current fiscal year was absolutely great. We had almost 7.8%. Q2 might take a slight dip, but because we had a lot of corrections in the domestic market, GST2 is going to boost consumption in Q3, and also it's going to help manufacturing. So we have got one more, the government is very keen to boost the economy, the domestic consumption, because even though the external environment might be difficult for us, the Indian environment shows a lot of promise. So that's how we are looking at. So we are extremely positive. We are hopeful that we will, if not, we might cross 6.7% as well. Let's look at now the investments in terms of the expenses, the capex expenditure which the government of India is focusing on. So if you look at it, we are almost at 4.3% of the GDP, which is a huge capex expenditure. Most of it is focused on infrastructure development, roadways, railways, We are connecting even the remotest corners of the country with railways, with roadways, and that is something over the last decade. India has seen more road constructions than in the last 50 years. Even railways, for that matter. Healthcare. So the government's focus is very clear. We are focusing on infrastructure. We are focusing on healthcare. We are investing huge money in terms of also, making manufacturing more sustainable. So there is a clean, green energy, focus on creating green energy. The other part of the investments is, which is, very true in India, and this is working like magic. There is a public-private partnership. And this is very unique in terms of what the government is trying to do. It's trying to motivate the private sector to come and work alongside the government, invest in government, vision, invest in government strategies, targets. So for example, semiconductors. There's one area where, India needs semiconductor manufacturing. And that's where companies like Tata's have come forward. Huge investments they have brought in. So this sort of investments are in terms of, and the other positive side is if you look at the capacity utilization. Now, if you look at the capacity utilization, we still have a huge opportunity because most of the industry, most of the manufacturing that you see here is, below the 75% mark. So in terms of, we can cater more to the world, whereas some of the other factories might be working, already over capacities. So we have got a headroom for expansion here, and that is a positive part of the Indian economy. The other thing which has happened in India, because India is a country of villages. We live in villages. Like in Bangladesh, you've got a rural population, a huge rural population, a semi-urban population. Urban population is, of course, there in certain pockets. But in terms of our presence, so because India survives on these villages, it's the machine which drives India forward. So when we see the rural consumption go up, that means whole India is growing. And if you look at the rural consumption here, it's actually exceeding the urban consumption. Now, that's only for the FMCG, but later on we will, get into two-wheeler sales and, passenger vehicle sales and other things. And the best part is the consumer confidence index in terms of, how the consumption pattern will move ahead.